The following program sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
And it's time to talk about money once again this week. I've got a great guest today who's got a great story. I want to talk about what's going on in Brexit. That's making the rounds right now. And the front page of Barron's came out this week saying how this bull market will end. You know, the bull market now is over 8 years old. If you'd invested $100,000 in stocks at the very bottom of the market in 2009, that $100,000 would now be worth $365,000 if you'd done as well as the market. You know, the Fed is raising interest rates. There's no real sign of inflation, but the Fed is raising interest rates. And if you look at new home sales in July, they plunged 9.4%, the number of new home sales. Consumers have been adding to their debt, and some people feel they may be completely tapped out. And there's all these worries. There's an old saying that the stock market climbs a wall of worry, and certainly we're there. You know, but I want you to think back. I want you to think back 25 years ago, 1992. You know, 1992, the world was very different than it is today. Very, very different. And I think that what we're seeing is applicable to this article on Barron's. You know, if you think back to 1992, I had just had my first email address, and it was on dial-up. You know, there wasn't 2G, 3G, 4G. There was a dial-up modem. You know, in 1996, in fact, I spoke to Rotary, and they asked me almost every year to talk about the stock market, and once a year I would get up and I would talk about the stock market. And in 1996, I asked the question, and there were about 120, 130 people in the room. I asked the question, how many people in here have an email address? And there were about half a dozen hands that went up. 1996, half a dozen people. I said, remember when people used to ask, do you have a fax? That's not been that many years ago. And this was 1996, remember? Not that many years ago. People would ask, do you have a fax? So people no longer ask, do you have a fax? They say, what is your fax number? Figuring that everyone had a fax number. I said the same thing is going to be true of email addresses. People are not going to ask the question, do you have an email? They're going to say, what is your email address? Now, I never forecast that people were going to have 2 or 3 or 5 email addresses, but that was a time in which there was a significant change going on. 1993, I actually did bill pay. I signed up with Check Free at the time. You got 10 free checks, 10 free, well, not 10 free transfers. Any transfer via the Fed funds rate was free, but you also had up to 10 checks a month before you had to pay for a check. And I remember even my family didn't like Check Free because sometimes the checks didn't get delivered on time and there would be a late charge. But you know, today, almost everyone has bill pay. That goes back to that period of time, 1993. The world was beginning to change. And I've talked on this program, I've been talking now for 7 years, actually 8 years, about the supercycle. A study done by Standard Chartered Bank out of the UK, they identified 2 previous times when world GDP grew at a faster rate than average. The first time from 1870 to 1913, it was the industrialization of the United States that really pushed the world GDP up. Then in 1945 to 1970, you had the second really big world GDP growth. It was the rebuilding of Europe. In the United States, you had the building of the infrastructure, the highways, the airports. You had the decolonization of the world because you had all these countries that had colonies. They were spinning the colonies out as independent nations. All that was going on, 1945 to 1970. Standard Chartered Bank said, in 2009, we began another supercycle when the world GDP will grow at a more rapid rate than average. That was their forecast. They forecast it was going to continue for 15, 20, 25, 30 years. We're in the midst of that, and that supercycle was to be driven by the emerging nations. A time in which we moved from subsistence for many of the people in those countries to real consumerism. So it was with interest that a couple things came out. One, I'm reading the book called Thank You for Being Late. It's Tom Friedman's latest book. There was an article in The Economist, and there was a McKinsey report that was done in March of 2016. And putting all that together, it means there's been a significant change in the 21st century as compared to the 20th century. If you look at total goods and services and finances, the amount of trade that was going on, in 1990 there was $5 trillion worth of trade, and it amounted to 24% of world GDP. By 2014, 24 years later, that trade amount of goods and services and financial instruments has grown from 5 trillion to 30 trillion, and it represents almost 40% of world GDP. In 1970, the United States GDP was approximately 1/2 of world GDP. 1970. Here we are less than 50 years later, almost 50 years, and we represent 22% of world GDP. In terms of what's gone on, our GDP has continued to grow, but the rest of the world is growing faster than we are. The world is changing, and we have to think of where we're going, not where we've been. The McKinsey report, done in March of 2013, identified what's changed in many areas. There was, in the 20th century, it was the flow of physical goods, and that was the key to trade. Today, it's data and information. Cross-border information data flows have increased over 45 times since 2005. Think about that. 45 times more data flowing cross borders today than there was in 2005. 45 times. There's now 914 million people in the world who have at least one international connection. They have one international person that they know. 914 million. Many of those outside the U.S. Many have connections into the U.S., into developing nations. It's been an explosion in terms of data and information. In the 20th century, it was primarily the advanced economies, the U.S., the European Union, Japan, who had the economies that were growing. Today, it's the emerging nations. It's when you look at what's happening with the data flow, with Facebook, with Twitter, with YouTube, with WhatsApp, with WeChat, Alibaba, and Skype, all those things are available not just in the U.S., but they're available worldwide. If you look back and think about the 20th century, businesses were very capital and labor intensive. To build a factory took a lot of a lot of capital. Today, we're building industries based on knowledge. It used to be large corporations built their own information networks. Now it's available to everyone, even the small companies. Transportation infrastructure, trucks and airplanes and moving things, rails, were key in the 20th century. Today, the infrastructure is the internet, the digital flow of information. It's not trucks and railroads. It's the digital flow of information. In the 20th century, it was dominated by multinationals to a large degree. Today, it's mainly small enterprises and individuals. 361 million people are doing cross-border transactions. 361 million people are doing cross-border transactions today. And transactions are monetized in the old time. Now you're moving things through free source, open source technology. We're moving across borders, and things are changing in the industries. The McKinsey report opened with a couple observations, and we're going to come back and talk about those observations right after the commercial break. And we're coming to commercial break. Don't go away. We've got a lot of things to talk about today, so hang on. I'll be right back.
About Money with Mike Adams will resume in a moment on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Did you know the 20-year annualized S&P return was 8.19%, while the 20-year annualized return for the average equity mutual fund investor was just 4.67%? That's a gap of 3.52%. It doesn't sound like much now, but it could mean the difference between retiring in comfort and running out of money. For some seniors, a gap that large could cost them hundreds of thousands of dollars and cut their retirement short. Don't run out of money. Call Mike Adams of Adams Financial Concepts today, 206-903-1019, and learn more about how you can, 1, create wealth for retirement, and 2, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019, or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
16.
We're back with more about money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
So I've been talking about the changes that have happened and the changing world we're living in, a world in which last century was a very different time than the world we're living in today. It has an impact on investments. It has an impact on what we do and where we make money. A lot of it was based on the McKinsey report that was done in March of 2016, and they opened it by talking about and saying that somewhere there's a girl in Kenya that logs on to take a personalized math class in California-based Khan Academy. Personalized math class. There's thousands of Syrian refugees who are getting the latest updated information to guide their journey through Europe and to resettlement. President Hollande of France, prior to their new president being elected, when he made the decision that any boat of refugees that came to France that had someone who was disabled would not be turned around and refused. That the next day, every single boat that left had a disabled person, not to be turned back. It's a time in which a multinational company can send out information and send out to censor 4,000 oil wells worldwide, an energy company. It's a time in which a manufacturer in Australia can order parts from a Chinese vendor through Alibaba. It's a time in which clinical trials running in India can use patients for a U.S. pharmaceutical study. Innovation has moved from advanced nations to emerging and now goes both ways. Innovation is happening, and disruptive innovation is going on not just in advanced countries, but in the rest of the world as well. You know, it wasn't that long ago, back in the 90s, when we were looking at factories being built, and today we're looking at a whole new working economy, a working type situation. 162 million people worldwide are working in the gig economy. They're freelance workers. You can go out and get a logo done. You can sign up on a website, and people will bid on doing a logo, and they'll give you a sample, and you can pay $5 or $10 or $20. You can go out and you can find people that will do programs for you. You can find any number of things that are happening worldwide. And when you get a submission, we looked at a logo once for a presentation we were doing, and we had submissions from all around the world at all different prices. We probably had over 100 submissions. I don't know. It's been a long time ago, and I've lost track of the numbers, but it's one of those things where you can get programming done. You can get information from people worldwide. And the expectation, while it's 162 million people working there worldwide now, it will be enough that $2.1 trillion is earned by people working in that economy. In my opinion, we're working in a Black Swan universe. There was a book written, when we went through 2007, 2008, talked about a Black Swan event, talking about the financial crash of 2008, 2009 as being a black swan. Nobody saw it coming, or almost no one saw it coming. It came with a very dramatic effect. I believe that there's not only negative black swans, there's positive. And when you think about it, and you think about the last century, we went through a Great Depression, we went through numerous recessions, we went through two world wars, we went through Vietnam and Korea, multiple worldwide conflicts. We went through communism and the Cold War. We went through 2 presidential assassinations. We went through the meltdown in Chernobyl and 3 Mile Island. 2 Mile Island? 3 Mile Island. I don't remember. It was 2? 3 Mile Island. Okay. Anyway, we went through those times, and with all those negatives, the market went from the beginning of the last century at 66 to 11,467 because there were things that happened that no one ever expected. During World War II, one of the big issues was aiming the big guns, because these people would sit in a room and make computations about how to aim the big guns, to fire against the enemy. And they'd get in wind information, they'd get in range, they'd get in all those things, and they'd sit down and they would use their math to figure out how the gun should be aimed. And the U.S. government came along to a company and said, can you make a machine that will do that? And they did make a machine that would do that. And the head of that company testified before Congress that he felt in the total market, they would probably only build 4 or 5 of those machines total. Now, the name of those people who sat in that room and did those computations, they were called computers. And they assigned that name to those 4 or 5 machines. Only today, it's not 4 or 5 machines you can see. We carry around with our phone number a computer that's more powerful than they had then. We've seen automation. We've seen polio vaccines, biomedical. In 1909, the average age expectancy was 47 years old. Today it's approaching the 90s. Aerospace, there was a time in which, transportation was the horse. Going from one side of the continent to the other was a day's trip. Today it's 3 hours by plane, 4, 5 hours, whatever it is. There's been an incredible number of Black Swan events, things that you can't visualize, couldn't have visualized 10 years before they happen or 15 years before they happen. Today, those exist. And I believe in the 21st century, we're going to continue to see more and more of those happen. And to be a very good investor and to make money in this kind of a situation, it's important to be ahead of the curve instead of behind the curve. And with that in mind, I want to introduce my guests because they are ahead of the curve. My guest today is Craig McLuckie of Heptio. Welcome to the program, Craig.
Thanks so much for having me on.
So why don't we start with your background?
Well, I'm an engineer. I've been working in the cloud computing and enterprise software industry for some time, mostly out of the Seattle area. Started at Microsoft, and then moved to Google right about the time that cloud computing was becoming a real thing, where people were starting to look to organizations that could run large workloads on their behalf outside of the data centers. And I built a computing product for Google called Google Compute Engine, which is a way that any company out there could rent some space on Google's computers. Thereafter, I started looking at better ways to extract value from that infrastructure, better technologies to take the applications that run businesses and make them easier to run, easier to manage, easier to live with. I started a project called Kubernetes, which is a very strange name, but it's become very popular. It's become widely used by organizations who are looking to run their own software, but not necessarily run it on their own machines, potentially run in the cloud, run in their own data center, run it wherever you may be. I also created a software foundation called the Cloud Native Computing Foundation, which is a home for technologies like Kubernetes and some of the other related open source technology projects. And more recently, I started a company called Heptio. We're relatively young. We're only 8 months old, but we are in the business of helping organizations take advantage of some of these new open source technologies that let them get more out of the infrastructure that runs their businesses.
So tell us more about Kubernetes.
Kubernetes is an interesting technology. When you think about the history of cloud, in the earliest days of cloud, you would have an organization that might provide software for you, and you could just access it through a browser or something else like that. And it was a very powerful way to reduce the cost of accessing something. And shortly thereafter, people started looking at ways to use the cloud to run their own applications. But the reality of cloud was that it was simply a replication of the physical infrastructure that they were used to using. It just looked like machines, computers, virtual machines in this case, that had the same properties as the machines they were used to anywhere else. The only difference is that the cloud providers would rent them to you on an hourly basis. Now, that was certainly advantageous, but it didn't really extract the full power of this whole cloud paradigm. If you think about what cloud does, it enables you to access something that's arbitrarily scalable. It makes it on demand whenever you need it, and it solves a lot of the operational problems that organizations have. And so what we did with Kubernetes was try to create a very strong platform that would enable an organization to tie together a large number of machines, whether they're physical or virtual machines, and then run their software as if it were cloud software. So run their software in a way that is robust from failure, makes it very easy to update, makes it easy to provision and access, and enables organizations by doing this to really just focus on the innovation they need to move their business forwards and less on the actual operations of what they do on a day-to-day basis.
I remember when I started in my industry and when they did an upgrade of machines, every machine had to be exactly the same for the software to run on the machines. And that's changed dramatically in these days.
It is extraordinarily painful, that process whereby a person would have to go in and provision each machine by hand, and was like a carefully crafting process. There's an artisan process. And what we've tried to do with technologies like Kubernetes is to entirely automate that process. There's some things machines just do better than people, And one of those things happens to be deploying software reliably.
It is one of those special things. We're coming to commercial break. Don't go away. We've got more to talk about on Kubernetes and Heptio, and we'll come back and talk about Brexit too. Don't go away. We'll be right back.
More About Money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Get away. Get a good job with a pen, you're okay.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I'm here with Craig McLucky of Heptio.
Yes.
And we've been talking about Kubernetes.
Kubernetes, yeah.
Kubernetes. Okay.
Kubernetes.
Kubernetes.
It's a terrible name, I know. I've had so many people tease me about the name.
Yes. How did you select the name?
It's an interesting question. When we created the technology, it's a little bit difficult to explain. As you can tell, it's pretty geeky stuff that runs right in the depths of cloud data centers and on-premise data centers. And I was working at Google, and we tried a lot of different names, and I couldn't get any of them past our legal folks inside Google. I think I tried about 13 names, and I was getting desperate. And I was driving into work and trying to imagine what the software was doing. And I thought, well, it's kind of like it's driving a car or it's steering something. And at the time, there was this big nautical theme that was going around in the software industry. You weren't cool unless you were using some kind of nautical term for some reason. And so I thought it'd be interesting to try to find an intersection of something like ancient Greek and nautical terms. And I figured that what the software we were doing was effectively steering a ship. And so the ancient Greek term for a pilot or a person who's the helmsman is Kubernetes. So I figured that'd be a great name, and I was pretty desperate, so we went with that. Turns out Kubernetes is actually the root word for cybernetics, and it's also the root word for governor, both of which have a lot of relevance in the area that I'm working. I didn't know any of that at the time. It caught me completely by surprise. So serendipity prevailed. I looked like I was smarter than I actually was, and we ended up with a name which seems to have stuck.
Well, we'll just consider that you are smarter than. Anyway, so let's talk about Heptio. How does Heptio function with all this?
Kubernetes is an open source technology, and it's important to understand that as you look at the world of enterprise software technology, open source is emerging as one of the most powerful and disruptive forces that is moving and sweeping through the industry. It's powerful because enterprise companies are becoming more and more reliant on technology. It's becoming increasingly central to the way that they operate. When you think about the payment industry today and what Square and Stripe is doing to traditional payment providers, when you even look inside an automobile manufacturer who historically would have a 5-year development cycle and they'd then produce a car that would go out to market, and then along comes Tesla. And the Tesla cars are effectively a software product. They get constantly updated, they change and they evolve and they become new. And so as industries are being disrupted by increasingly technically savvy organizations or these new upstarts, it's becoming increasingly important for them to have more control of their own destiny. And they're increasingly turning towards open source technologies, of which Kubernetes is a good example, as a way to tap into this lifeblood of innovation that is shaping up these industries.
So let's back up a minute and talk about open source. What is open source technology?
Well, there are two kinds of technologies that exist. There's the traditional way that you would think about software technologies, which would be called licensed technologies or proprietary technologies. And that is technology that's owned by a company or an individual, and that you would pay them some kind of licensing fee or royalties to use for your purposes. Then there's this other type of technology which has emerged called open source. And our open source technology, it started off and everyone thought it was crazy, but it turns out that it's an incredibly powerful thing. The technology is not necessarily owned by anyone. often as not, the intellectual property or trademark is held by an independent software foundation. And then the community itself comes together and contributes and makes the technology better and better and stronger. And it creates this incredible wavefront and communal sense of innovation. There's a lot of organizations that are willing to put resources into this technology. They use it and then they contribute back. They make it better and it constantly evolves. And it's not necessarily owned by anyone.
And you get all the different people that are programming and putting in the technology. And everyone has a better idea or a way to improve. And so you're drawing on a multitude of users doing the programming instead of a single person or a single company.
That is exactly right. And the thing that's so powerful about it is as you look to these modern enterprise organizations that need to get more out of technology, they could turn to a proprietary vendor and rely on the developers that vendor provides. Or they could look to these open source communities and potentially contribute themselves. They hire developers themselves. Those developers are smart. They can solve some of their problems. And they're incented to solve those problems and then contribute it back into the open source, thereby evolving the project as a whole and making sure that other people continue to use the technology that they provided, maintain it, support it, enhance it, and innovate it. And as a result, you have this incredible network of effect of innovation that's happening. And it's all being driven out by this incredibly disruptive open source technology.
So explain where Heptio fits into this now.
Now, if you're an enterprise software company, open source technology can be scary. For many organizations to embrace an open source technology, they may not necessarily have the expertise to deploy it, install it, configure it, and if things get rough, debug it, fix it, update it, etc. And so as they're looking to use a technology like Kubernetes, they often need a natural partner who can come in and help them get over the adoption curve, get the technology deployed, and if something happens to go wrong, they need someone who can help them fix it. But more importantly, they also want a partner who can bring them into the ecosystem and help them ensure that as the technology evolves, it evolves in a way that's solving their problems. And that's what Heptio is aiming to do with the Kubernetes ecosystem.
So tell us, in terms of that, are there particular machines that are involved? You're working on an open source software in the cloud.
Mm-hmm. So the way this tends to work is what Kubernetes does is it creates this little isolation layer, if you will, that separates out the software that a business needs to run from the infrastructure that it runs on. So if you look at a lot of businesses today, cloud is becoming a major driving factor for their sort of purchasing decisions. But at the same time, they also have a lot of on-premises assets. They've built out big data centers. Those data center assets are depreciating on their balance sheets, and they want to be able to use them. They don't necessarily want to have this artisan-based approach where they can send someone in and configure a machine on premises. And then they have to have someone with a completely different skill set that goes and works in the cloud environment and configures the machine in the cloud environment. They'd much rather have a technology that can tie those machines together and create a very consistent and common experience for running their software, whether it's running in their data centers on premise, whether it's running in the cloud, or potentially, as we start to see a lot of innovation happening at the network edge, where we're seeing the wireless providers starting to look at 5G technologies. They're creating this incredible connectivity to end consumers. We have the Internet of Things emerging, where new classes of devices are creating vast amounts of information. Businesses need to be able to run their workloads closer to where that traffic's being generated, but they don't necessarily want to have to mess with the machines and actually send an operator in to go and configure them. They would rather rely on a technology like Kubernetes to create a very principled and simple and consistent environment where they can take their software and say, run the software for me, make sure it works correctly, and when I need it updated, update it for me.
Awesome. So let me come back to open source software ones, because how do you guarantee that someone doesn't come in and jam the whole thing up or hack it or put in some sort of non-useful information?
It's a great question. And open source governance is something of a dark art. There's a long history, and a lot of work has gone into creating a set of practices that ensure that open source technology is both safe and that it is controlled and that it doesn't tend to tear itself apart. Obviously, when you look at an ecosystem like Kubernetes, you have the possibility of somebody inserting something bad into the technology, which would disrupt the industry. And we obviously, as a community, have put a lot of checks and balances. Nothing goes into the project that's not reviewed by people that are explicitly trusted. There's a lot of work done to make sure that the technology continues to work properly and is not buggy and is correct. But the thing that is a little bit more subtle and in some ways more challenging is ensuring that the community itself functions well. You have a lot of software vendors who've historically built proprietary technology and are now looking to open source as a way to progress their own businesses. And that creates a very strong tension to move the technology in a way that advances them in particular. And so the way that we've worked to make sure that this doesn't impact the Kubernetes community is to create a software foundation which governs the project. And another interesting story is, as I was putting this foundation together, I was taking my citizenship, and I took a lot of inspiration from, the most stable democracy the world has ever seen, and the idea of checks and balances. And so as we instituted the software foundation, which is the place that governs Kubernetes, we made sure that the needs of the end users were being represented, by a certain group. We made sure that there was a body that could make decisions, much like the Supreme Court, and could arbitrate over the technical direction that things took. And that there was another body that could then also govern and allocate funds and pass regulations. And so we separated the foundation into an end user body, a technical body that was nonpartisan, smart, elected individuals, much like the Supreme Court. And then the House, which is effectively the group of individuals that control the funds. That's the vendors. And I think it's been quite successful.
So I want to ask quickly, what is your market? Who are the companies that you're looking to do business with?
We are looking to do business with organizations that are looking to get more out of technology, that are looking to move from self-identifying as regular, traditional brick-and-mortar type organizations to become technology organizations. So we're looking to help the banks, we're looking to help the telecommunications industry, we're looking to help manufacturers, retailers, and any organization that is looking to get more out of tech.
We're going to come back, and I will get your information on how you can contact Craig and Heptio. Don't go away, because you want to get that information, and I've got more to talk about, so don't go away. We'll be right back after this break.
For more information, click on adamsfinancialconcepts.com.
How do you picture retirement? House on the beach, small farm in the country, traveling the world with your spouse. The one thing you don't picture is running out of money. Retirement dreams are shattered all too often by poor investment choices, sending many retirees back to work. If you think the job market is tough now, try entering it after you've retired. Don't run out of money. Start planning now. Call Mike Adams of Adams Financial Concepts today at 206-903-1019 and learn more about how you can create wealth for retirement and probably, most importantly, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019 or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
So I'm here with Craig McLucky of Heptio. We just started talking about their potential customers, their market. So maybe, Craig, you can again say who your market is, who your customers might be.
Mm-hmm. So we tend to focus on technically savvy, progressive organizations. So most of our customers right now are large banks, large telecommunication companies, large manufacturers, and retailers who are looking to adopt this cloud-native computing paradigm and need to build and run their own software. It's mostly for organizations that are making significant investments themselves in technology and need a better way to run it that's not tied to a specific cloud provider or tied to a specific data center location.
And how would they contact you?
The best way to get hold of us is to visit our website at heptio.com, Heptio. I'm also on Twitter for folks who are social media followers, and I can be contacted at CMCLUCK is my Twitter handle. So it's open for direct messages if people want to get hold of me.
Great. Thank you.
Thank you so much for having me.
It's incredible to see what's going on in this world today. And talking about what's going on in this world today, we haven't talked about Brexit for some time. And we're starting to see the impact of Brexit. Now, I want to take you back to the beginning when people began to talk about Brexit and what I think happened with that whole vote. If you look at the British Empire, going back to the 17 and 1800s, there was a time in which the sun never set on the British Empire. You had Canada, Australia, India, Hong Kong, countries in Africa, the Middle East. The British Empire was the largest empire in the world. The sun never set on the British Empire. It was the most powerful country. Even with the rise of America, still, Britain was one of the most influential countries in the world. Even as America went through its industrialization and became the number one economy in the world, Britain was the second largest economy, and they had a significant impact on the world stage. But times change. No longer was Britain the number two economy. By the time the Brexit vote was taken, China was second. Japan was third. Germany had already passed the UK and was in fourth. UK was in the fifth. And their influence worldwide had really shrunk, had waned. Instead of being an empire where the sun never set, they were one of the countries in the European Union. And immigration, it was a major factor talked about in the UK as it has been in the US. From 1993 to 2014, 3.5, somewhere between 3.8 and 5.5 million people immigrated into the UK. Many of those were from Eastern Europe. The Eastern Europe, once the USSR collapsed, and those CIS countries, the Commonwealth countries, became independent, a number of those people began to move, and they moved freely through the European Union system to the UK, and especially from Poland. And that was happening long before the Syrian immigration. And that was a real change, because prior to that time, Britain had always had an emigration. From the 1800s until the mid-1980s, it was a net emigration. You had the sun that never set on the British Empire, and you had the Brits that were going to all those countries, to Canada, Australia, India, Hong Kong, to the Middle East, to Africa. And you had Brits coming to America and to the rest of the world. But in the middle 1980s, the reverse began to happen. And they began to go from a country that was emigrating people to one that was immigrating. And the accusation that came out at Brexit was that the immigrants were taking jobs from English citizens. While studies showed that wasn't true, that it was the recession that was taking jobs, you can remember from the U.S. when people looked around and we had 10% unemployment, and people felt insecure about whether their job was going to be there the next day or not. It's a tremendous feeling of insecurity. And the Brits were feeling that. They looked around and saw people being put out of work, not thinking so much recession as the immigrants that were coming in, because some of those immigrants were still coming in and getting jobs, and they were paying their own way. In addition, you had the problems with things like steel. You know, the Chinese overexpansion was something that China had built too many steel mills, too many aluminum smelters. They had done too much, and what we were seeing was they were cutting prices so low that British steel mills were not able to compete. And that too figured into this. You had a country with 8.3 million non-citizens in a country of 63 million. Compare that to the U.S. We have 11 million illegal immigrants out of 300 million. That would be like having 40 million. You know, it was really happening in the UK. And so there was a lot of discouragement. No longer was this a question of the sun never setting on the British Empire. There were all these issues that were going on. And add to that, you know, going through the Great Recession, all the countries, most of the countries of the world, realized they had to stimulate their economies. China did, the U.S. did, and European countries did. But of all, the Chinese stimulated more than we did. We stimulated more than Europe. But Europe decided upon a pattern of austerity after they began to recover from the Great Recession. And you know, that time of austerity, they cut their budget by 25%. They began to cut down things. And that put more people out of work. So the impact today is what's happening is that local wages are stagnating. Consumer credit increased 10% in 2016. Credit surpassed that of 2008, and in the past 4 years, credit's doubled and bankruptcy rates are rising rapidly. And especially in areas like Wales and northeast England, both of those areas voted heavily for Brexit. Both of those areas have over 60% of their products they produce are export products. And by shifting out of a single market, they could be subject to duties of 33.5% on things like their dairy, their scotch, their alcohol. All those things are going to be subject to duties and pressure. It's not a very good situation. It seemed like it was something that they wanted to do. I wonder, as we go forward, if they'll still feel that way in a year or two. We're starting to see really tough times coming for the UK. Brexit is just beginning. And that has a roll-down effect, but not a very great effect for the US. That wraps it up for today. I will be back next Friday when it'll again be time to talk about money. Have a great weekend and a great week. Until next week.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again for more About Money with Mike Adams here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's Adams Financial Concepts. The following program sponsored by Adams Financial Concepts.